Should you take your pension tax-free cash? Hi, I'm Jasmine from Redwood Financial. We're a family-owned and run chartered financial planning and estate planning firm based in Hampshire, and we've been helping clients in this area for over 20 years. Accessing your pension tax-free cash is a really important decision and is obviously not a decision that should be taken lightly. The key thing for me when it comes to whether or not you should access your pension tax-free cash is all around what's the purpose. Taking the tax-free cash for the sake of taking the tax-free cash will have little benefit. Bearing in mind that pensions grow free of income tax and capital gains tax inside the pension fund, if we then simply take the pension tax-free cash out and put it in a bank account, let's say, it's then going to be subject to cash interest rates and income tax on the interest that we earn. So we've taken it from a tax exempt environment where it was growing and put it into a taxable environment. That doesn't make any sense. So if it comes to taking our tax-free cash, there always needs to be a purpose around it. Do we need that tax-free cash to pay off a mortgage or to help extend or change our property to make it more suitable for the rest of our life in retirement? Are we using it to fund some once-in-a-lifetime holidays? Whatever the purpose is for taking the tax-free cash, we need to make sure it's a strong one. And we need to make sure that you've assessed all your other assets first to make sure that is the most tax-efficient place to take it from. We might be taking tax-free cash to help fund inheritance tax planning solutions now that pensions are going to form part of your estate for inheritance tax purposes. There are lots of different reasons why you might need to access your pension tax-free cash, but making sure that it's the right purpose and we're using the right investment vehicle is going to be a first important part of making that decision. We also need to understand and identify, do we need to take all of our tax-free cash in one go? Do we need to take the full amount in one lump sum? Or actually, do we need just a slice of tax-free cash? And actually, we can leave the rest of that to continue growing and perhaps get bigger over time. So it isn't a case anymore where you have to take the full 25% all in one go. You've got an option to take little slices out of your tax-free cash over time, which also might be more beneficial depending on your circumstances and your needs. So it's not a question about is it right or wrong to take your tax-free cash? It's really about understanding the wider implications of that, but also then sense checking that taking the tax-free cash won't have a negative impact on your overall financial position moving forward. Now, if you're using your tax-free cash to help fund your retirement or pay off a debt, for example, then that might not have too bigger impact. But if we're taking our tax-free cash out with the intent purpose of just spending it all on bucket list holidays or a new car, for example, we need to be really sure that by spending the money on those assets that aren't actually going to help generate us income in retirement, that we're not leaving ourselves too short. And a good way to do that is going through a retirement model cash flow forecast. That allows us to actually have a full look at where you are now, where you want to be before retirement, and look at all the inflows and outflows that are going to come in from now till the rest of your life. And we can model lots of different scenarios, including the impact of taking your tax-free cash out and spending it instead of using it to help fund your retirement, to give you that peace of mind that you can actually afford to do that before you take that action. So using some kind of cash flow planning modeling is a really powerful way to help enhance and strengthen your retirement position. There is lots more information about pensions, retirement planning, and accessing your tax-free cash on our website. We have our Roadmap to Retirement webinar that you can watch, as well as lots of blog articles. And if you do have any other questions that are specific for you and your needs, then you can contact us and we will arrange for you a 15-minute complimentary callback with one of our advisors who will be happy to help answer your questions.